Welcome back to the channel, everyone. Today I want to talk about how the AMC squeeze is being covered up, how attention is being diverted away from the AMC squeeze to other things like the market crash. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, for months now, the mainstream media has been trying to divert attention away from the AMC squeeze and is trying to suggest that the market crash will be caused by many other catalysts and not the squeeze. For months now, AMC posts on Twitter and on YouTube have been subdued by those platforms trying to hide the AMC squeeze from the general public. Now, many of you will have seen the film Wag The Dog, but a lot of you might not. Basically, it's a film where the mainstream media creates propaganda to cover up a big story and blame something on something else. Per Wikipedia, the plot definition says the president is caught making advances on an underage girl inside the Oval Office, less than 2 weeks before the election. Conrad Breen, a top spin doctor, is brought in by a presidential aide to take the public's attention away from the scandal. And it says he decides to construct a fictional war in Albania, hoping the media will concentrate on this instead. It says Breen contacts a Hollywood producer to create the war, complete with a theme song and fake film footage of a sympathy-arousing orphan. The hoax is initially successful, with the president quickly gaining grounds in the polls. Now, obviously this is a fictional film, but coincidentally, Wag The Dog was released 1 month before the outbreak of the Clinton-Lewinsky scandal and the subsequent bombing of the Al-Shifa pharmaceutical factory in Sudan. And that obviously prompted the media to draw comparisons between the film and reality. In addition, the comparison was also made in December 1998, when the administration initiated a bombing campaign of Iraq during Clinton's impeachment trial over the Clinton-Lewinsky scandal. Right now we have the Russian invasion of Ukraine. Now, I'm not suggesting that this is fictional, but mainstream media is suggesting that this could rock stock markets and send energy prices soaring and the market crashing. And it seems like they could be trying to divert attention away from the AMC squeeze and pin the blame of the market crashing on many other things entirely. Mike Wilson, an equity strategist at Morgan Stanley, said in a Monday note to clients that an invasion may well lead to a spike in global oil and natural gas prices. Such a spike would destroy demand, in our view, and perhaps tip several economies into an outright recession. And he said in the event of an armed conflict, we could see a strong increase in financial market volatility from current levels. And Michael Strobeck, a global chief investment officer at Credit Suisse, said in the event of an armed conflict, we would see strong increase in financial market volatility from current levels. And he said global equity markets could fall more sharply, as in more than 10%. And on top of that, they're also warning of risks in the leveraged loan market, and actually, that could cause the market crash as well. Top US banking regulators have warned that risks associated with the leveraged loan market are still high. The leveraged loan market is a $3 trillion market, and this year tons of these loans could end up slipping into default. But I think, as Elon Musk says, true national debt, including unfunded entitlements, is at least $60 trillion, roughly 3 times the size of the entire US economy. Something has got to give. Basically what Elon is getting at here is there's tons and tons of over-leveraged players in the market that's causing massive risk. The Fed has said a number of times in their financial stability reports these over-leveraged players, whether they're over-leveraged shorts or over-leveraged longs, have taken on so much debt and it's incredibly risky for the wider financial system. The wider market is obviously recognising this, and equity market liquidity has absolutely collapsed. Markets recently entered a new volatility regime following the Volmageddon. Evaporating liquidity reflects this as well. Volatility is expanding, and this is just systematic pulling. Bids are vanishing, and real deleveraging will trigger feedback loops. So basically, market liquidity refers to the extent to which a market, such as a country's stock market, allows assets to be bought and sold at a stable, transparent price. When the spread between the bid and ask price grows, the market becomes more and more illiquid. This is basically showing that these over-leveraged funds don't have any more cash to deploy, and tons of other hedge funds are realising the risk in the current market and aren't willing to trade, therefore sucking liquidity dry. Tons and tons of funds and institutions out there realised how overleveraged these shorts are and therefore aren't willing to provide the liquidity, and therefore the bid and asks of pretty much all stocks in the entire market is widening massively. We can see here that right now the equity market liquidity is currently lower than it was back in the start of 2020 when the pandemic was first released. This is basically showing that hedge funds and institutions right now are more scared of the market than they were back in March of 2020. Clearly they know that the AMC squeeze is coming and they do not want to be on the wrong side of the squeeze. Therefore, these funds and institutions that aren't shorting AMC basically don't want to provide the liquidity for any stock in the market because they know that when AMC squeezes and these over-leveraged funds get vaporized, the entire market will come crashing down as well. Most of you may not have a lot of confidence in the stock market at the moment. There's tons and tons of market manipulation and market fraud that seems to be going entirely unpunished. And that's why I personally have also been investing in cryptocurrency, especially during this big dip. With BlockFi, you can not only invest in crypto, but you can also get up to $250 in free Bitcoin when you sign up using the link in the description below and make your first deposit. BlockFi also offers a rewards credit card with an introductory rate of 3.5% cashback on your purchases, also paid in crypto. There's also no annual fees and no foreign transaction fees, but right now the credit card is only available in the US and not in the UK at the moment. So guys, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. And in terms of AMC, the 4-hour OBV or on balance volume is looking straight parabolic. You can see here that while the price of AMC over the last few days has been rising from this $13, $14 region all the way to the $20 region, the OBV has been working its way back up as well. The OBV is now basically making this triple top position, somewhere around 110, 120 million shares, and could be soon breaking out to new all-time highs. When this OBV or on-balance volume breaks out, we're likely to also see a breakout in the AMC price as well as trading volume skyrockets. Right now, trading volume in AMC is the one piece of the puzzle that we're currently missing. We have that 100% utilization, we have this all-time high in short interest percentages, but right now we currently don't have that volume of hundreds of millions of shares. When we start seeing not 100 million shares traded, but 500 million shares traded in a single day, that's when AMC will start running and could potentially cause the squeeze. And finally, David Neo has given an important MOAS update. He said that the GameStop and AMC short squeeze will take place, but it could be controlled and managed by the SEC to protect investors like your mum and dad who are pension account holders who have personal investments. He said this could be the one and only time the SEC is protecting retail investors. Why do I say that? And he says, I can only imagine the existence of US stock market and survival of capitalism through some serious reforms to prevent Wall Street crooks from destroying startups and entrepreneurs in greed. He said, imagine if Elon Musk's company was destroyed back then. We wouldn't have EV technology like we do today. And he said, in my view, the future market will have some or all of these changes, either short selling or dark pools being banned, because both of these cannot exist if we really want free and fair markets. He said exchanges will likely have blockchain technology for fast settlements, not T+2, not T+1, but T+0, to prevent naked short selling. He said once the exchanges add NFTs to the shares, then synthetic shares won't actually exist. There won't be any pump and dump Ponzi schemes like we see now. And he said, I think the SEC will probably suspend trading in AMC and GameStop for up to 10 days during the squeeze to prevent additional market manipulation. He said, let's say short sellers have 140 million GameStop shares short or 2 billion AMC shares short. They can buy and cover tons and tons of those shares this Friday and create a squeeze up to say $1,000 per share, but then at the top, buy put options. And he said the next day they could push the price of AMC down to $25 or $50 a share, like they did in the past, and they'd have massive amounts of unrealized profits on those put options. But if the SEC suspends trading, then those put options will lose value fast, and they won't be able to sell off the puts. He said if they try to manipulate and bring the price down, then out of the money put options will start to gain value at a very fast rate. You can then use that money to buy more shares and effectively cover their position without taking on massive losses. But we can also buy AMC and GameStop options as well to amplify the squeeze. But obviously if you do buy options, buy them like Wall Street. Buy in the money or at the money calls, but for a few months or a few weeks down the line, not for this Friday's expiry. And obviously be sure to exercise those options if you can to actually get those shares, which will force the market makers to go into the market and buy us even more shares, which would effectively prevent the hedge funds from covering for an even longer period. Guys, be sure to let me know down in the comments below whether you think the squeeze is being covered up. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!